Navigating a complex week, earnings and inflation signals. Global markets faced a busy week. Key earnings reports were closely watched. Important economic data also arrived. Investors carefully assessed all new information. Volatility remained a persistent feature. Policy implications were a central focus. The overall market outlook shifted subtly. A degree of uncertainty was still present for many. See, this environment demands careful navigation. Investors are seeking clarity. Several major companies reported earnings. Microsoft showed continued strong cloud growth. Its Azure platform continued impressive expansion. Investments in artificial intelligence showed early promise. Alphabet, Google's parent, saw advertising revenue rebound. Google Cloud also performed very well this quarter. These positive results from tech giants boosted sentiment. Their forward guidance was cautiously optimistic. This provided a lift to Nasdaq futures. Other sectors presented mixed pictures. Tesla's vehicle delivery numbers met analyst estimates. However, margin pressures were clearly noted. Competition in the electric vehicle market is increasing. ExxonMobil, conversely, benefited from firm oil prices. Global energy demand remained quite robust. The company prioritized shareholder returns effectively. These diverse results highlighted significant sector divergence. Investors had to weigh many different signals. The Personal Consumption Expenditures Price Index was crucial. This index is the Federal Reserve's preferred inflation gauge. May's data indicated a slight moderation in price pressures. However, the core PCE figure remained elevated. This situation complicates upcoming Federal Reserve decisions. Expectations for interest rate cuts therefore shifted again. The higher for longer interest rate narrative held. Market reaction to this data was measured but attentive. Global headwinds and tailwinds, Asia and Europe in focus. Asian markets showed varied performance. South Korea's political landscape is settling. This follows their recent national elections. The economic implications are now being assessed. Policy direction will be key for investment. Regional stability remains a primary concern. Domestic reforms are also on the agenda. Market participants watched for new initiatives. International trade relationships are also vital. US-China tensions continue to simmer. These tensions affect trade and technology sectors. Investment flows are influenced significantly. Businesses adapt to the evolving geopolitical landscape. Supply chain diversification is a common theme. The risk of further escalation remains. This uncertainty impacts long-term planning. Global companies must navigate these complexities. Dialogue between the two nations is critical. China's economic recovery efforts are ongoing. The nation faces challenges in regaining momentum. Pre-pandemic growth levels are proving elusive. Domestic demand shows signs of fragility. The property sector still requires stabilization. Government stimulus measures are being deployed. The effectiveness of these policies is watched. Global growth depends partly on China's success. European markets navigated their own currents. The European Central Bank's policy stance is pivotal. Inflation in the Eurozone shows stubbornness. Brent crude oil prices added to concerns. Volatility in energy impacts consumers and industry. Economic growth across the bloc is uneven. Some nations show resilience, others struggle with structural issues. Political cohesion within the EU is also important. Geopolitics, commodities, and the digital frontier. Political developments in the Middle East are critical. These events have direct global consequences. Oil supply chains can be easily disrupted. Any escalation impacts crude prices significantly. Regional stability is paramount for energy markets. Diplomatic efforts are closely monitored by investors. Uncertainty in this region often fuels volatility. Risk premiums can rise very quickly. Global energy security depends on peace. Commodity markets experienced notable trends. Oil prices saw fluctuations during the week. Geopolitical factors were a primary driver. Demand forecasts also played their part. Gold maintained its appeal for some. It is often seen as a safe haven asset. Its price reflected global economic anxieties. Industrial metal prices showed mixed signals. This reflected varied industrial demand outlooks. The cryptocurrency market continued its evolution. Bitcoin showed growing institutional momentum. More traditional financial players are entering. Price projections for Bitcoin remain a hot topic. Regulatory clarity is still developing globally. This uncertainty affects broader adoption rates. The asset class is maturing steadily. Investor interest remains high despite volatility. Long-term potential is often cited. Stablecoin developments also garnered attention. The ecosystem is expanding rapidly. Regulatory discussions are intensifying worldwide. Authorities seek to manage potential risks. Stablecoins could reshape digital payment systems. Their role in decentralized finance is growing. Interoperability between different stablecoins is key. Innovation in this space is very fast-paced. Ensuring financial stability is a priority. Synthesizing the signals, outlook, and key considerations. This past week highlighted several major themes. Corporate earnings showed resilience in some areas, yet persistent inflation concerns remain. Geopolitical factors continue to influence markets. These elements create a complex mosaic. Investors must connect these diverse dots. Understanding interdependencies is absolutely essential. The global economy is highly interconnected. Navigating this requires a broad perspective. Central banks face a delicate balancing act. The Federal Reserve is a key example. It must weigh inflation against growth. Current economic data sends mixed signals. Policy mistakes can have large consequences. Market participants scrutinize every statement. Forward guidance is exceptionally important now. The path ahead requires careful judgment. Credibility is a vital asset for policymakers. Key risks and opportunities lie ahead. Investors must monitor these closely. Inflation persistence is a primary risk. Geopolitical flare-ups are another concern. Opportunities may arise in specific sectors. Technology and energy transitions offer potential. Diversification remains a prudent strategy. Active management can add value. Careful research is more important than ever. In conclusion, vigilance is paramount. Adaptability is also critically important. The current global market environment is dynamic. Conditions can change very rapidly. Informed decision-making is crucial for success. Investors should stay updated on developments. Long-term perspectives help navigate short-term noise. Prudence and agility will be rewarded. The path forward requires both.